Top 10 stocks for a retirement portfolio. When planning their investments, retirees face different problems than other investors. Investors who are already retired or who are getting close to retirement may need to think about how their investments will replace their income. In today's videos, we are going to talk about top 10 stocks for a retirement portfolio. So let's get into it. Number 10, McDonald's Corporation. Richard and Maurice McDonald opened the first McDonald's restaurant in 1940. It is now a multinational fast food chain based in the United States. The fast food company has a strong position in the real estate market and has raised its dividends every year for the past 45 years. On May 26, McDonald's Corporation announced a $1.38 dividend per share, which is the same as before. On June 20, the dividend will be paid out to the shareholders. On June 7, the dividend yield for the company was 2.22%. On June 7, UBS analyst Dennis Geiger kept McDonald's Corporation's buy rating and $290 price target. He said that the company is well positioned as a high-quality, defensive compounder that should be able to hold up well thanks to the benefits of consumers spending less and the factors that keep sales moving forward. Number 9, the Procter & Gamble Company. The Procter & Gamble Company is an American multinational company that makes consumer goods. Its main office is in Cincinnati, Ohio. The company makes and sells a wide range of personal care and hygiene products. As of June 7, the dividend yield was 2.49%, and the company had increased its dividends for 65 years in a row. On April 20, 2022, the consumer goods giant released its third quarter earnings report for 2022. The Procter & Gamble Company had earnings per share of $1.33, which was $0.04 more than what was expected. Also, the revenue for the quarter was reported to be $19.38 billion, which was $687.8 million more than what was expected. Number 8, PepsiCo, Incorporated. PepsiCo, Incorporated is an American multinational company based in Harrison, New York. It makes food, snacks, and drinks. PepsiCo, Incorporated is a leader in the bottled beverage industry. Since 1965, the company has paid quarterly cash dividends, and this year marks the 50th year in a row that the dividend has gone up. On April 26, PepsiCo, Incorporated announced its earnings for the first quarter of 2022. The company reported an EPS of $1.29, which was $0.06 more than what was expected. The company also reported sales of $16.20 billion, which was up 9.31% from the previous year and $658.69 million more than what the market had expected. Number 7, MetLife Incorporated. MetLife Incorporated, which is better known as the Metropolitan Life Insurance Company, is one of the biggest companies in the world that sells insurance, annuities, and employee benefit plans. It has 90 million customers in over 60 countries. Citi analyst Michael Ward began following the company on May 23. He gave it a buy rating and a price target of $77. MetLife Incorporated announced on April 26 a quarterly dividend of $0.50 per share, which is 4.2% more than the previous dividend of $0.48. The dividend will be paid out to shareholders on June 14. On June 7, the company's dividend yield was 2.95%. Number 6, Chevron Corporation. Chevron Corporation is an American energy company with offices all over the world. It is one of the companies that came after Standard Oil. It is based in San Ramon, California, and does business in more than 180 countries. The company is known as a dividend aristocrat, and its 35-year streak of consistent dividend growth makes it a great choice for long-term investors. Chevron Corporation pays a dividend of $1.42 per share every 3 months, which is the same as before. This dividend will be paid to shareholders on June 10. In May, Barclays analyst Jeanine Wei raised Chevron Corporation's price target from $183 to $196 and kept the share's overweight rating. Number 5, Consolidated Edison, Incorporated. COND, which stands for Consolidated Edison, Incorporated, is one of the biggest investor-owned energy companies in the U.S. The company has been increasing its dividends for 47 years in a row. It is one of the most well-known electric utility companies that pays dividends. On April 21, Consolidated Edison, Incorporated announced a $0.79 per share dividend, which is the same as before. As of June 7, the dividend yield for the company was 3.21%. On May 5, the company released its earnings report for the first quarter of 2022. It said that it made $4 billion in revenue, which was up 10.42% from the same time last year and $350 million more than what analysts had expected. On May 23, Guggenheim analyst Shahriar Pourreza changed Consolidated Edison, Incorporated from sell to neutral with a price target of $94, up from $80. He did this because the company's earnings outlook over the next few years no longer had a major regulatory risk. Number 4. ExxonMobil Corporation. ExxonMobil Corporation, which is written as ExxonMobil, is an American oil and gas company with its headquarters in Irving, Texas. The oil and gas giant has raised its dividends every year for the past 39 years in a row at an average rate of 6% per year. As of June 7, it pays a quarterly dividend of $0.88 per share, giving it a dividend yield of 3.41%. Stephen Richardson, an analyst at Evercore ISI, changed ExxonMobil Corporation from in-line to outperform and set a price target of $120, up from $88 on June 7. The analyst thinks that upstream upgrades and cost cuts will lead to long-term growth in earnings, and he thinks that ExxonMobil Corporation will have an industry-leading ROCE goal of 15% and 17% by 2025 and 2027. Number 3. Duke Energy Corporation. Duke Energy Corporation is an American holding company that deals with electricity and natural gas. Its main office is in Charlotte, North Carolina. On April 27, the company said it would put money into 2 projects to turn the gas from 2 landfills in North Carolina into renewable natural gas. Every year, each project should make about 500,000 decatherms of renewable natural gas. For 96 years in a row, Duke Energy Corporation has paid a cash dividend on its common stock. On May 5, Duke Energy Corporation announced a $0.985 per share dividend, which is the same as before. The dividend will be given to people who own shares of the company as of May 13 on June 16. After quarterly results came out on May 10, Wells Fargo analyst Neil Calton raised his price target for Duke Energy Corporation from $109 to $120 and kept his equal weight rating for the shares. According to the analyst, North Carolina will have a better regulatory environment and numerous opportunities for energy transition after 2025. Number 2. Cardinal Health Incorporated. Cardinal Health Incorporated is an American multinational healthcare services company that works with hospitals, healthcare systems, pharmacies, and ambulatory surgery centers to provide them with custom solutions. In May, Evercore ISI analyst Elizabeth Anderson changed her rating for Cardinal Health Incorporated from in-line to outperform and raised her price target from $55 to $68. After looking more closely at the medical segment's future for the fiscal year 2023, the analyst came to the conclusion that the business can bring in about $16.7 billion in revenue, which is about 6% growth from the previous year. He thinks the market is undervaluing this segment. Number 1. Realty Income Corporation. Realty Income Corporation is a real estate investment trust that buys commercial properties in the United States, Spain, and the United Kingdom that are freestanding and have only one tenant. Realty Income Corporation is one of the best-known stocks that pays a dividend every month. In its 53 years of business, the company has raised its dividend 115 times, for an average annual growth rate of about 4.4%. Realty Income Corporation reported an EPS of $1.01 for the first quarter of its fiscal year 2022, which was $0.04 more than what was expected. Also, sales came in at $807.34 million, which was a 93.29% increase from the previous year and $58.66 million more than what the market had predicted. High-yield stocks are appealing to investors, especially retirees, because they pay out more income. But investors need to do research on each stock They want to buy to make sure that the dividend payout can be kept up. That's all for today. I hope you liked the video. If you did, make sure to hit that like button and subscribe to the channel so that you never miss any amazing video from us.